Nitin and Rajan, I'm going to throw this to both of you. So there are some people who are asking us, is this a bubble? I'm going to ask Nitin to go first, and then perhaps Rajan can come.
I don't know. It feels a little like bubble. I mean, it feels like bubble because there is such a big rush of liquidity, not just in private space, maybe a little bit in the public space, because there is, what markets are doing is so detached to what's happening to the economy. So maybe all of that makes it seem like a bubble. But the thing about bubbles are that, even if it's a bubble, you don't know how big it gets. So I think it's no point trying to time these things. You have to kind of go with the flow, and just have your rules in place, which is diversification and stop losses and all of that. So.
Right, Rajan, do you want to weigh in? Because you've mentioned a whole host of reasons what has changed in the last few years in terms of the payment rails, the data costs, the founders. But if you look at some of the key actors, they are back in roaring form, be it Tiger Global, SoftBank. So, and the amounts and the pace at which they are investing is making people apprehensive. What would you say? How would you address these concerns?
Yeah, I think Chandra, first thing to keep in mind is that there's 18 trillion with a T, right? Dollars of capital in the world today that is at negative interest rates. That is why you're seeing P ratios at an all-time high in every public equities market anywhere in the world. I think Radhika can talk to what's going on in the Indian exchanges. And that is why you're seeing lots and lots of capital coming into private markets, right? Because think about it, $18 trillion of capital at negative interest rates. So the world is a wash of capital, and this capital is actually looking for returns. Anything that is better than zero is good. And then if you can get better than 10% a year, that's pretty good. And then above 20% is sort of extraordinary, right? I mean, from a global macro context. So I think we should keep that in mind. The second point to keep in mind is, look, everything has a cycle, okay? Nothing goes up really, really fast without also coming down at some point. So keep in mind, there always are going to be cycles, right? Now the question to Nitin's, and by the way, to Nitin's point, you can never time them, right? I think if any of us could time the market perfectly, none of us would be on your show, because the time might have been like while we were on the show, right? So I think you can't be timed, but there are cycles. I think what the real question is, what should investors do? And what should startup founders do, right? I think investors, at least we believe, and Chandra, as you know, right, Sequoia Capital has been in India now for over 15 years, right? Every 2 years we, raise new funds, right? Our last set of funds, which were in June of 2020, as you know, the venture and the growth funds were the largest funds that we were fortunate to be able to raise. And we also just closed our seed fund. We are here to stay, right? Sequoia Capital is here for the next 100 years. We will keep investing every week, every month, every year. And it's not just us, right? There's a whole set of other firms like Accel, like Lightspeed, like Elevation, a lot of the Indian firms like Kalari and Bloom and others and so on. There will be some global firms that may actually have spurts in which they invest a lot more and maybe they go quiet. But the reality is India today has a well-established ecosystem, a set of investors, large number of investors that keep investing. So as an investor, the thing to focus on is, are you backing extraordinary founders who are going after large markets? And then in late stages, do you believe they actually are building very interesting businesses? And what I mean by that is, at the end of the day, every business, and I mean every business, needs to generate an enormous amount of cash flow. Okay, I spent a long time at Google. Google is not Google because it's got billions of internet users. Google is Google because it's got $150 billion in the bank, and it generates north of $10 billion every year in cash flow, right? So you've got to believe great team, big market, and got a business model that eventually will actually become massive economic value creator. So that's what you've got to focus on as an investor, right? If you find those companies, as I said, at where I spend most of my time, which is at seed stage, whether it's 5 million or 10 million or 12 million, that's not really the question. As a startup founder, I think if you are able to raise capital, what you should do is, number one, raise it from high quality investors, okay? Because whoever you're raising money from, Chandra, as you know, and Nitin knows this, Adit knows this the best on this call, is going to be with you for a decade, okay? It's a 10 to 15-year commitment to a set of investors. So make sure you're partnering with the right set of investors. And second, whatever you raise, be prudent with what you raise. Because we don't know whether we're at the top of the cycle, middle of the cycle, we're not at the trough of the cycle. but we know the cycle will change, right? And so, if you're able to raise a large amount of capital, at least what I would sort of caution founders who are able to raise a large amount of capital is be prudent, right? I mean, India, Maharashtra is in lockdown, Delhi is in lockdown this weekend, tomorrow over the weekend, right? We're at 17,000 cases a day yesterday. We're going to be at 300,000 within the next 10 days, right, Chandra? So we're going back into a very uncertain world. So I think if you're able to raise from the right investors, be prudent with your capital, but most importantly, focus on building an enduring company, right? Because, if you don't do that, by the way, Chandra, lots of unicorns that became unicorns are no longer unicorns. Why? Because they didn't build enduring companies, right? So I think, so again, right, are we at the peak of the cycle? Are we not? Are we a bubble? Wrong question if you're an investor, and wrong question if you're a founder. The right questions are, can you find the right companies to invest in if you're an investor? And if you're a startup founder, can you get the right investor on your cap table? And most importantly, please use the capital wisely.
So is the momentum here to stay, Rajan, at least for the rest of the year?
So let me give you, okay. So, I get this question often. The problem with us is we only remember the last 5 or 10 years. We don't spend as much time thinking about the next 10 years, okay? So last year, Chandra, India had $10 billion of startup funding, okay? 10 billion per year. China had 70 billion last year. The US had $130 billion of funding that went into the US ecosystem. 2019, India had 14 billion. We declined to 10 billion. China and the US both increased the amount of startup funding, okay? So if you ask me, is the momentum going to continue? I would say we're just getting started.